How do you think about rebalancing your portfolio? Like, I know some people, like every quarter, they'll kind of adjust to like certain percentages, but how do you go about doing that?
Huh, that's a great question. I don't have a formulaic way of doing it. To be honest, it's just sort of like if I feel that something is starting to get a little bit overvalued or higher value than a higher price than I would have expected, then then that's when I start to trim that position. So you've seen me do that on Robinhood. You've seen me do that on Rocket Lab, despite me still loving those companies and thinking that they have a bright future and they're going to continue to grow rapidly. But I've been trimming those positions as opposed to adding them. A lot of people do the reverse, meaning as the company's stock prices start to go up, they start to buy with the momentum, expecting the company, prices to continue to rise. But to me, they become higher risk because I've already bought a ton when they were low priced, right? Like that's what I'm doing, accumulating Rivian and Bumble, for example, right now.
Mhm.
Um, so, when other people are going to be super excited about Rivian, hopefully, assuming the price goes up at $50 or $60 or $80 a share, I'm going to be like, okay, this is now where I expected it to be, a couple years from now, and I'll be unloading it as opposed to loading up more. So, or at least trimming my position somewhat. So that's the way in which I do it. I don't have a strict formula base. Now, in both Robinhood and Rocket Lab's case, um, both of them have reached almost 30% of my portfolio at one point or another. In some cases, it was even higher than 30%, and that definitely makes me nervous when one stock is. I'm not a very diversified. I'm not pro diversification in general. So. Um, if okay, let me take a step back. I'm very uh, focused and highly concentrated investor in general. So let me set the stage. If I had an income and the amount of money I was investing was relative to my income was similar or let's say less, then I would probably be very concentrated in two, maybe three names, even more concentrated than now. And I'd probably have a much smaller cash position than I do now because my main income was coming from someplace else. Um, my living expenses were being paid from my main income, so therefore my investments would be all about how can I make my investments become uh, go up rapidly in such a way that actually has a meaningful impact on my life, right? That's the way I would be looking at my investments. Now in my current position, my investments are the vast majority of my net worth, and I don't have any other income. Therefore, I'm more diversified, despite the fact that I'm not very diversified, than I would be otherwise, right? So uh, I'm diversified in like six or seven things as opposed to two or three things, and when one of those six or seven things becomes more than 30% of my portfolio, then that definitely makes me nervous.